Yo, what's good? Welcome to another market review. As always, these are just my interpretation of price. I'm a developing student. Let's get straight into it. As we can see, overall, what is order flow? Order flow is bullish, but as we can see here, the way that we ended the day, we kind of have see that we've kind of ended some bullish momentum. As we see up until this point, we've had expansion candles, and right here we've shown something different. We've had a doji candle or a indecisive candle, whatever you want to call it, and this going into my bias into the next upcoming days, we could possibly see some form of retracement into an area of fair value or retracement down into one of these fair value gaps or possible more manipulation higher. We do have CPI on Thursday and Powell does speak tomorrow as well. So I think that could lead into maybe another consolidation, maybe more consolidation, and then could lead to more retracement here. So it all depends on what we do tomorrow and what we're likely going to prime up for Thursday CPI. So as we see here, this is how the daily candle closed. We attacked this previous day high. Well, not the previous day high, but the the high before that day, and then we closed within the 25%, or we almost closed at 25% of that body. Just to know, and look at how we closed. We have a doji candle, so this kind of has some indecisiveness within the market of what we're trying to do. So as you see here, we were within a range. We were within a range. London did not manipulate at all. We just traded within this range. We created a range. We barely took sell side. We had a shallow rate of sell side. And right here, this creates more sell side interest. So right here, when the market trades up and clears buy side first, we're likely going to see all this low resistance liquidity sell side, this new day opening gap, and then this 15-minute fair value gap right here. And then that line right here is that denoting that high on that daily candle there. So as you see here, we come up, we take buy side, we take buy side again, and we create that high resistance signature that I'm going to denote into the lower time frames. Whenever we see high resistance signatures at around market open at around 10 a.m., we know that we're likely going to reprice to the low resistance signatures. And as we see, we have constant encroachment of this candle right here, of this wick, sorry, and look at the bodies are respecting that right there. This is 8:30 opening. This is all happening above 8:30 opening and above true day open. So then we displace lower. We new day opening gap gets the initial response. We trace back up in equilibrium, and then we head back lower into this draw on liquidity, which was my draw on liquidity right there. And as you can see, this is the 5-minute chart. So as you see, buy side got taken first, buy side was manipulated first, and then we spend a great deal of time here. So Powell testified at 10 a.m. So I think that we're just waiting to get an actual displacement move. Here we got displacement, and then we have mitigation right there. Pull back to that. And then that's that constant encroachment in that 15-minute wick right there. And then boom, we come down here. We actually take sell side here, internal sell side in that new day opening gap right there. And then we reprice to constant encroachment with this wick. And then we break down here. And then we see higher prices there. So as you see, here is exactly what I'm talking about. High resistance signature. What do I mean by that? So anytime the market opens, I'm looking for high resistance signatures versus low resistance signatures. As you see, market opens here. And we come up and we take buy side first. So we've already liquidated buy side here, and we come back lower, and what do we do here? We take internal sell side. So what are we doing? We're inducing breakout traders. We're inducing people to head short in this 950 macro that may think this is a breakout. Maybe this was an entry right there. To then come back up, and then we take buy side again. So right here, we've not only taken buy side once, but we have taken buy side twice. So therefore, the market shouldn't really need to head any higher. We've already done the damage. We've already screwed as many traders as we could, and as we see here, this range right here, this range right here is balanced. This is a consolidation. This is a dealing range. This is sufficiently balanced, and so therefore markets should not need to reprice here. What have we made here? We made a dealing range here. What have we done? We've taken the dealing range high. That's the soup right there. Boom. Then we get displacement, fair value gap in, fair value gap out, signature right there. Reprice right to that order block and right to this imbalance, this inverse right here. Paired with that, I'm going to fine tune my imbalance with that. That's what we end up reacting off right above true day open as well. 1050 macro opens up and we displace lower. Notice here, where do we get some responsiveness? Right here, new day opening gap. So notice that got traded to, and then we reprice higher, and we come back lower. This is a fractal market maker sell model. Here you have a distribution, sell side liquidity reach, and then we come back up. We're kind of just distorting time here. We're not really doing much here. And then we displace lower. Finally hit that draw on liquidity here. And we were doing some weird stuff This is a 15-minute imbalance right here, and we trade right into that new day opening gap within that 1250 macro. Here's that 1150 macro, and then here's that 1050 macro, and then 950 macro noted up here. So overall, wasn't the cleanest price action, but because of Powell speaking, all-time highs. We're likely going to consolidate because we have CPI on Thursday, but this is 2 days before our CPI, so we're likely. I think that we're trying to generate liquidity for CPI. I think that's just my interpretation on this, and I think that we might have a market maker buy model, but all depends on what happens. Obviously, I'm not trying to predict 2 days in the future. I think that's silly. But as we see here, here's that balanced price range. Here's that dealing range. Here's that original consolidation that we end up having. And look, note what we do here. High probability soup forms because we take a previous dealing range high right there. So we take both buy side and sell side. We reprice up to buy side. We now create a high resistance signatures. High resistance signatures. And notice what we've had this morning. We've had a shallow rate of sell side. So we know that there is a large sell side interest now within the market. Once we see fair value gap in, fair value gap out, we know that we likely could reprice there. But we come down and we take that fast here with not within a macro here. So there's not really much interest within here. And then right here, we hit new day opening gap. Where do we reprice right to? Equilibrium of this dealing range right here. That's still going to be of significance right here. And notice that equilibrium lines up with this up close candle, also this inversion right here, and then also that inversion that we noted there. And this right here, this is noting just a change in state delivery that we are now shifted to a sell side program. I believe it's on the 5 minute. And here we see sell side like noted. And I thought this was interesting. ES was actually not so. ES and NQ actually weren't so much. ES was out of sorts today. ES, like, I don't know how this could have been traded effectively, profitably, and consistently. ES just looked out of sorts. I know I personally am going to avoid conditions like these. I'm going to try to avoid conditions like these. So therefore, this is a good case study to see, hey, what type of conditions do we have? Powell was speaking. We're in all-time highs. We don't really have much going for us. We have CPI on Thursday. All those could be factors to maybe us kind of consolidating like this. But we didn't really have any valid manipulation. We don't have clear draw and liquidity. And we come up and we take buy side here at later in the day. I believe this is 1 p.m. And then we form a big SMT between NQ and ES. And then we immediately reprice lower, creating a balanced price range, creating high resistance liquidity. And look at where we reprice to. Look at where the market's in a hurry to reprice to before the day's over. I thought that was interesting. That's just something to put in the log. That's the current new day opening gap, by the way. And as we can see, this was kind of the price action we ended up having. I know there's a lot of annotations on here. For real, I guess I was a little bit lazy with this. But as you see, what do we have here? We just have original consolidation. We're just trading within this original range right here. We barely shallow raid, pretty much equal lows on sell side here. We have a resting sell side that exists here. And then we reprice higher. We manipulate this to then reprice lower to 15-minute balance to this new day opening gap, and then to that previous session high right there. And then we barely take that low right there. I honestly do not really know why the low of the day got placed other than ES trading into the new day opening gap. So that's why the low of the day entered right there. So yeah, and as we can see, NQ closes the day right at fair value, which is that new day opening gap, which is dynamic fair value. And yeah, that's pretty much the conditions that we had today. I was going to review more, but that's all I'm going to do. I'm just going to have NQ and ES. Anyways, I appreciate y'all, and I'll see y'all in the next one.